So price took out this particular structural high here. So this is the first most recent breakout to the upside. And after price took out this particular structural high, you can see how price created, right? Our new external range liquidity has been created. So remember from the basics of structure, I said that after price takes out an internal range liquidity, after price takes out an external range liquidity, we expect to see a reversal. Then after price takes out a reversal, after price does the reversal, takes out an internal range liquidity, right? So we want to see price continue to move to the upside until this most recent external range liquidity is taken. So overall, when you look at what price has actually done here, you will figure out that structurally from the 4 hours, in fact, that's what I've said over time, that except those that are just really recently joining us, I've said it, that to understand the directional bias of the market is one of the things you should train yourself to really know. And you can streamline yourself to understand the direction of the market if you pay attention to 4 hours and the daily. All right. And I've also said it before that pay attention to the most recent breakout to the upside. So you see that when we come from where we are coming from the left-hand side, you can see how we are bullish, right? Right. Even if you don't use candlesticks, but with line chart, you can see how we are bullish. The next thing we are seeing on the 4 hours time frame, you can see how we see that this is a higher high, this is a higher low, and this is a higher high. Remember, every most recent higher high is going to be treated as what? Internal range liquidity, right? This low is going to be treated as what? Internal range liquidity. Every external is going to be, every higher high is going to be treated as external range liquidity. So if you use the understanding of basic market structure that I taught you, you'll see that I said that after every external range liquidity is taken, price is going to reverse. And after every internal range liquidity is taken, price is going to expand to take out the most recent external range liquidity that is taken. So from the advanced market structure that we just taught not quite long, answering that particular question, you see that this is the most recent high, this is the higher high, this is the higher low, this is the higher high, right? So let's forget that all of this is this high, is this low, and is this high. Contextually, do you know that with the basics of structure, I can build bias from this already? So what is the context I'm going to be using to build bias? Number one, the most recent breakout is to the upside, right? After this most recent breakout that has been given to the upside, now this tells me that we are bullish. So it makes a whole lot of sense for me to only look for buying opportunities. Am I going to get selling opportunities? Yes, but we know that the selling opportunities is going to be there. It's going to be a retracement. Why? After every external range liquidity is taken, we want to see price reverse, right? So you can see from here we have this higher high, higher low, higher high. This is going to serve as internal range liquidity. So we took out this internal range liquidity, give to us some form of this external range liquidity. So in this type of scenario now, what do you find out the price has done for you? What would you say is the most recent structure that has been created? Simple. The most recent structure that is being created from this market here is simple as this. Higher high, this is this. Follow me. We have this higher high, we have this higher low, we have this higher high. Look at this. This is the higher low, right? So this is the most recent external range liquidity that got taken. So we expect some level of at least a bit of reversal. Now, this is the moment price starts to reverse, this is going to serve as our new external range liquidity. So what do we expect price to do? We expect price to give to us some retracements, come here again to take out some internal range liquidity and expand to the upside. It's as simple as that, right? So any other person who has questions can ask right before we just look at. Thank you for this question. At least you've been able to allow us use it as an example. Any other question, please shoot.
Yes, thank you.
Can you hear me? Sorry. Good evening.
How many people are asking now? Somebody is speaking already.
Yeah, I've gone mute for him. Let him talk.
Oh, line chat is somebody who is Cherry said is line chat. See, if the moment we start to go deep dive into what we do, right, you will use line chat a lot. We use line chat a lot here. We use line chart a lot. It helps us to know key levels. So that is even one of the best ways to know key levels, line chart. The story is in the line chart because line chart actually covers the body and the volume is in the body, right? We use line chart a lot, right? So yes, Danani asks a question.
Okay, yeah, so I was gonna ask,
yes.
you said every internal structure here, we have the higher high and then the lower high. You get, so every lower high can serve as two things, either an internal range or a structural change. Yeah. So is there a possibility that if it closes, you said it is depending on how the candle is being formed. That is, yeah, if it closes with a full body, then it's a structural change. But if it closes with a weak, that's an internal range liquidity. Yeah. So I was going to say, is there every possibility that the candle can close with the body and still not change the bias?
Good question. Yes. Let me explain. Thank you. That's a very thoughtful question. In fact, I was expecting somebody to. I was thinking somebody was going to ask something like that, right? That's a very thoughtful question. So this is it. So this is the question that the person who just asked, right? Now, if we have higher highs and higher lows like this, remember the basics of what we said. I said price will always going to create for us so-called higher high, higher low, higher high, higher low, higher high, higher low, higher high. And I said that every most recent high is going to be treated as external range liquidity, and every higher low is going to be treated as, all of this will be treated as internal range liquidity, right? Or they are going to be treated as structural points, right? So now he's asking, is it possible for price to close below a structural point with a body and still continue to buy? Perfectly yes. And that is where we now talk about the two structural points break. Now, this is what I'm going to, this is what we're going to do. Let me explain it for you. If price breaks below a structural point, just one structural point, right? Like breaks below it with a body, closes below it as a body. It is possible for price. Now, this is where, trading is a game of probability, right? So now this is what you now begin to understand. If price breaks below this particular low, closes below it as a body, we only have one structural point break. It is not sufficient enough for us to know that price wants to continue to move to the upside, that price is now going to shift its bias from bullishness to bearishness. One structural point break is not sufficient enough to let us know that price wants to move from bullishness to bearishness, right? Price can take out one structural point, close below it as a body, and the next candle that is going to form will just create for us maybe like a, can we hear me? Can we hear me? Can we all hear me?
Yes, yes.
Okay, thank you. Sorry, just the normal Nigerian network, right? So now back to the question I was answering. If price takes out one structural point, a structural point break. You can't see my screen. Who else cannot see my screen?
It's clear, we can see.
Okay, so I guess that will be your network. Whoever said that, work on your network, right? The same way I've worked on mine, right? So now, one structural point break is not sufficient to tell you that price is going to shift its directional bias from bearishness to bullishness. It is not sufficient. But the moment we see that price breaks below at least two structural points break, right? It is also, that becomes sufficient for us to know that price is willing to shift its directional bias from bullishness to bearishness. Now, this is where the exception comes in from. If you begin to, because when we start to talk about how to build bias, so for example, if you are building bias from the weekly key level, right? Say we have a V-shape and A-shape key level on weekly time frame. Price taps into the A-shape key level, right? Reacts from it and closes below. So we know that this is going to be the weekly time frame, right? If we move one time frame lower to the daily, on the daily time frame, we just need one structural point break to be sure that daily is in alignment with the weekly. Now, the exception is what I'm showing to you now, that if you build bias from the weekly time frame, in the concept of building bias, if you build bias from the weekly time frame, you have weekly reject weekly and close below. When you move one time frame lower to the daily, on the daily time frame, we just need one structural point break. The purpose of this one structural point break on the daily is for us to confirm that the daily is in alignment with the weekly time frame. That is all. But let's say you don't know where price is coming from on the weekly, you don't know where price is coming from on the daily. All you are just seeing is that price just keeps creating for us higher highs and higher lows like this. Do you understand? And price just gives to you a one break, right? Price crosses below one structural point liquidity, one structural point. Right? But you don't know where price is coming from on the weekly, on the daily. This one structural point break is not sufficient enough maybe on the 1 hour or 30 to the downside, right? It is not enough. But if you see that price breaks below at least price to move to the downside. Do you understand? When it comes to the concept of building bias, we need one structural point break to confirm our bias that price is either going to the up or to the downside. But when it comes to just proper structural formation on lower time frame, like 30 minutes, 1 hour, it is not sufficient enough. One structural point break is not sufficient enough to let us know that price is going to shift its directional bias. Do you understand? But when it comes to building bias from the weekly on the daily, if you build bias on the daily, we need a 4-hour break. If you build bias on the weekly, we need a 1-hour break. The purpose of the 1-hour break or the daily break or the 4 hours break is to confirm that the daily is in alignment with the weekly or the 4 hours is in alignment with the daily. But when it comes to the side of proper structural formation on lower time frames like 1 hour or 30 minutes, right? One structural point break is not sufficient enough to say that the price is going to shift its directional bias. Do you understand? I hope that was answered. Did I answer your question?
Yes. Thank you.
Okay. Next person ask your question. Whoever wants to ask now.
Good evening, boss.
Good evening, Daddy.
Okay. I have a question, please. There are times when the line chart shows a break, but then the daily candle doesn't. Like maybe it closes above the body, but doesn't close above the wick, the candle wick. Do we consider the line charts valid at that point?
Brother, I can put it to you with my full chest. The way Burna Boy said it, you can bank on it. Whatever line chart shows you, that is what you should bank on. If line chart is showing to you that we have a break, and on the candles, when you move to the candle, you see that we broke above the body, but we did not break above the wick. But when you come to the line chart, and the line chart is showing you that we have a break, my brother, we don't break. Oh. We have broken. Use what you see on the line chart, right? What you see on the line chart, because the line chart actually covers the body of the candles. It doesn't reference the wick. The volume is in the body, not in the wick. Do you understand? The volume is always in the body and not in the wick. So if line chart shows to you that we have broken, my brother, we have broken. Don't go and be waiting for one candle to break properly again. Just position yourself for that entry, right? Any other question? Any question?
I just wanted to ask, so you are saying if you're using the higher time frame is your bias, you're okay with moving to the lower time frame and using one structural break. But if you haven't used the higher time frame, then you use more. You need more than one. Is that it?
Yes.
Okay. Thank you.
Yeah. Okay. Let me use this chart as an example, right? But the question that everybody has been asking, I'm going to use. This guy don't get this. Somebody just got distracted because you spoke, right? So if you look at this, the time frame is 2 hours, right? You can see the time frame is 2 hours. So let's use this chart to explain everything we've been saying, right? The structural formation is very simple here, right? So what did you notice here? Higher low, we have this higher high. So okay, we have this higher high, higher low, then we have this minor structural formation here, right? Higher low, higher low, higher high. So did you notice what price did here? So look at this. The major structural formation is this particular low. The major structural point is this particular low. If price breaks below this particular low, it means we have broken structure, right? But if you look at how price created the structure, right? We had this higher high. If you move to the line chart, it becomes very clear, right? Look at the line charts. Let's take it from the line chart. So look at this higher high. This is the higher low. This is the higher high. So we have another internal structure that was created, right? We have this higher high. We had this higher low, we had this higher high. Did you notice how we broke below this particular low that got created? If you notice how we broke below that particular, you can see how we broke below this particular low with the body. The moment we broke this particular low with the body, wait, let me ask some question. In fact, this question is for old members. How many people were trying to short USDCHF from here this morning? If you were part of those people trying to short USDCHF, raise up your hand. Identify yourself in the chat box. How many people? Nobody has answered yet. Okay. If you were trying to short USDCHF from here, raise up your hand. I have gift for you. Okay, Asashi raised up his hand. Good. I have gift for you. Raise up your hand. Be truthful. So you will see there were people who. Okay. Salem said it, but amazing. So look at this now. Structurally, you can see higher high, higher low. We have this higher high. But before this higher high was created, we had an internal structure that was created, higher low, higher high. Price broke below this internal structure. So the moment price broke below this internal structure, ideally, everybody wants to start to look for selling opportunities because they are going to consider this as a break of structure. No, the most recent structural point is this. You remember what I said? Every higher low that is being created is a structural point of until we see price break below this particular low, which is going to make it two structural point break. One, and 2 before we say we are going to continue to short. But look at what price did on the lower time frame, which is this 2 hours. We broke below this particular one structural point with the body impulsive move. This is going to induce a lot of early sellers, right? And look at what price did. We have not gotten to key levels, but let me show you. Move to the line chart, you can actually spot the V-shaped key level that was created here. There's something we teach called the single candle formation, right? So you can see this single candle formation is going to serve as internal range liquidity. So you look at this V-shaped key level got created, internal range liquidity, which is going to be the single candle formation. This is it here. All right. Internal range liquidity swept, price came back to the V-shaped key level. Tap that same level how many times? 1, 2, 3, 4. And price started to move to the upside. Look at the momentum push. Look at the momentum push. There were people who were trying to short here, right? They got, well, Yoruba people used to say, right? So you see on the lower time frame, like I said, one structural point break is not sufficient enough, especially when you don't know where price is coming from on the higher time frame. But when you look at the structural points, the structural formation right here, higher high, higher low, higher high, right? This is a structural point that was created after this internal range liquidity was created. But the main structural point is this particular low. Yes, Cherry, raise up your hand. You raise your hand, speak.
But I'm not getting how you determined that that middle one was irrelevant and not to be considered. What was your logic for that?
This one?
Yes. How did you eliminate that and say, okay, until it breaks the second one? Because naturally, everybody would have assumed that one is a structural break as well, right?
Okay. So now let's put it this way. Okay, let's put it this way. You remember our first approach when we were talking about advanced structure? I said when it comes to advanced structure, what price is going to do is that price is looking to move from one point of liquidity to another. So you can see price will come to take out the internal range and continue to move. So you see that this is, I told you that also contextually, what you are going to pay attention to is the most recent breakout to the upside. So when you pay attention to this particular structure, this is where the structure started. The structure started from here, higher high, then it ended here, higher low. Then it took out this particular external range liquidity, right? Now pay attention to this. The moment you took out this external range liquidity, price will give to us a reversal. Remember the basics of structure. After every external range liquidity is taken, price is going to reverse. At the moment we had a reversal, price created this low as inducement or internal range liquidity. Then it gave to us a move to the upside. So what that means for us is that when you look at it, when you consider the overall structure that price has created, you will see that this is the overall structure. Higher high, higher low. Then price created this high. Look at this. Then it created this low. Then it created this high. So where are the structural points that we want to pay attention to? The first structural point is going to be this one. The second structural point is going to be this one. But when we consider what the overall structure is doing, our most recent breakout is to the upside. Our most recent breakout is to the upside. So we will see that the most recent breakout is to the upside, higher low, higher high, right? So the first context we are putting to it is the most recent breakout to the upside, which means that if price breaks, if we know that the most recent breakout is to the upside, it means that we are bullish, right? If we are bullish, it means that this particular low, which is going to be treated either as a structural point or internal range liquidity, right? If price closes below it with an impulsive move as a body, it is not sufficient enough to tell us that we have broken structure. Why? Because contextually, our most recent breakout is to the upside. Now, we broke below this particular one. This is the last structural point. We want to see at least 2 structural points break to be able to be sure that we now want to shift our directional bias from bullishness to bearishness. But when you look at what price did, what did price do? We only broke below one structural point. And after breaking below one structural point, what did price do? Price started to move to the upside. Let me see. Cherry, is that clear? Okay, somebody says it's very clear on H4. Okay, let's look at H4. Great.
Yes, it's making sense. Thank you. It does.
Yeah. So when you move to the H4, it becomes very clear. Thank you, Black King. Thank you so much. And when you move to the line chart on the H4, what would you find? Look at your most recent breakout. 4 hours. Look at this. Beautiful. 4 hours gave to you your most recent breakout. Spot for me your structural formation. Higher high, higher low. This was just an internal range liquidity that was created. And we have this higher high. But forget about this internal range liquidity. Pay attention to the structural formation. Higher high, higher low, higher high. Look at this. The 2 structural points that are being created is number 1 and number 2. But because of the 4-hour most recent breakout to the upside, this breakout down, this break of structure is not one structural point break of structure is not sufficient enough to say that price wants to shift its directional bias yet. Because when we look at where our price is coming from on the H4, our most recent breakout is to the upside. Yes, I've made a tweet a whole lot of times about it. Somebody said one of the major reasons that yeah, see 4 hours time frame will be gold money, but not many people know actually 4 hours will be gold money. Right? The moment you are able to learn how to do that, right? Learning how to build bias and entry. And I've said it that one of the simplest ways to learn how to build bias is that the moment you build bias from the daily time frame or the weekly, just go and be waiting for 4 hours most recent breakout and wait for internal range liquidity to be created. Single candle formation is something we're going to treat this week as well. The moment you have an understanding of all of that, you won't even be rushing trade because you know it takes 4 hours for one candle to form. It takes 4 hours. So you can see we have used the remaining 30 minutes to answer questions. So Zoom said we have 10 minutes left. So let's take a few questions. So Cherry, look at this. Most recent breakout is to the upside, but the overall structural formation is this on the 4 hours. Higher high, higher low, higher high. Do you see this? We broke below this low, but this is going to serve as internal range liquidity. The only time we will consider a shift is when we at least break below these two structural points. The moment we break below these two structural points, we know that we are ready to shift our directional bias. Do you understand now? So the first thing you are paying attention to is the most recent breakout to the upside, especially on the higher time frame. Okay, last question. We have just 1 minute left. So ask your question.
So yeah,
yes, go ahead.
Is somebody speaking?
No.
Okay. So as a day trader, basically, yeah, I get my confirmations from the 4 hour time frame, right? And then I was gonna ask. I don't know if we'll probably get there yet, or maybe we've already moved past it. But one that confuses me is when you say the A level and the V level. I mean, I'm literally struggling with that, so I probably do not understand that part well.
A level and V level.
Yeah, like A formation and the V formation. Okay.
It's for key levels.
That's fine then.
It's different. We'll get there.
Well, that's what I'm trying to know, if we're probably going to get there already.
We are there. No, we're going to get there. A-shaped key levels, those are the levels that we are mostly going to be taking our entries from. A-shape or V-shape or open close. So those are levels we're most likely going to be taking. We'll get there. We're taking it one step at a time, right? So there's no rush. We're just taking it one step at a time, primarily. So no fugazi at all.
I am enjoying the slow movements.
Yeah, so there's no rush. The market is always here, and we have this December to ourselves to learn as much as possible and to also implement as well. So I have a question. Okay, Chimbuchi iPhone, unmute your mic. We have a few minutes left, so let's use a few minutes to answer questions. I was thinking we'll cover a lot of chat markups, right? So we can train our eyes a bit to see, but we've been able to use all the time to ask questions. I love it as well, right? Ask your question. Yeah.
Okay, good evening.
Good evening, sir.
Please, if you should start from the weekly time frame to build a bias.
Yes.
Let me say from a key level, and you found a rejection, and maybe as you went down to the daily time frame and you found a breakout. After the breakout on the daily time frame, you still went to your 4 hours time frame and see a breakout, as in all of them are aligning together.
Yes.
You understand? Let me say is an uptrend, as all of them are aligning together. I think can you still just as in enter the trade as somebody that started as having his own bias from the daily time frame, or will you as in have to take it on the 4 hours time frame based on you started from the weekly time frame for your bias?
Okay, summarize your question into one, right? Your question is that, are you going to take your entry from daily or 4 hours?
Yeah, like if you start from a weekly time frame, are you taking from daily? And if you start from a daily, are you taking from 4 hours? Like
when we get to the place of entry, right, it is going to be on the trader's discretion. But this is it. If you build your bias from the weekly and daily has given to you confirmation, And 4 hours gives to you a confirmation that 4 hours is in alignment with the weekly and with the daily. 4 hours gives to you a breakout, right? If you find an entry on the 4 hours, take it. But many a times 4 hours might not be clear, so you might want to move on time frame lower to like either 2 hours or the 1 hour.
Oh, okay.
The moment you see that the 2 hours or 1 hour is in alignment with the 4 hours, the daily and the weekly, take your trade. But most importantly, if you build a bias from the weekly, right, and daily is in alignment with the weekly, and you see that 4 hours has given to you a most recent breakout to the upside, right? It might not even be a most recent breakout. Weekly rejects weekly, daily gives you a breakout to the upside, right? 4 hours can just give to you like an engulfing, creating for you a V-shaped key level. The only thing you just have to wait for, extra patience, is that you might just want to wait for the next 4 hour candle to serve as internal range liquidity that is going to be resting very close to the V-shaped key level. Take your trade from the 4 hours and move. It's just like this particular trade, that this GBP USD CHF. Look at this. Taking a trade from the 4 hours time frame here. I mean, it just requires extra patience, nothing more. Remember, look at this single candle formation serving as internal range liquidity. So what did price do? So look at what price did. Right, we took out this liquidity, came out to rebalance this holding balance here. So what price did is that price created for us price gave to us this V-shaped key level on the 4 hours time frame, right? And then internal range liquidity got created. So price came back, took it, none of that. So there's no point. You can always take your trade from 4 hours. Right? The reason why people don't like taking it from 4 hours is because people are always impatient, right? They can't wait for that 4 hour time frame candle to form. Right. I hope that's clear. Cherry, you have one more question.
Okay.
Unmute your mic and ask. Okay, do you still have a question?
I still have a little thing I want to ask.
Okay, please shoot.
After this most recent breakout, let's just take for instance that this particular we have not taken this external range liquidity. Then after this breakout, then from this particular one now, this before you identify this V-shaped key level where price reacted from. Like I can't observe where the price was reacting from this other part of the past range, as in where the price reacted from. Okay. You know that the price has stopped is now remaining to go to the external range liquidity.
Okay, see, simple now. If you stay long with the chart, you find your answer. So when you look at what price is doing, you look at this. You can see on the 4 hours time frame, right? Yeah. Let's answer. We have a few minutes left, 3 minutes. I don't know. So look at this. This is what's internal range liquidity on the 4 hours, yes. Right? So the market has two responsibilities: to attack liquidity and to rebalance and rebalance. So you can see we have this imbalance. This imbalance needs to be rebalanced. So if you look at all of this, the major key levels that we can find here is this: what we're expecting price. Let's say we're actually expecting price to come back to that 4 hours of bearish open close that got disrespected, but price did not come back here. So if you look to the 2 hours, what would you find?
Yeah.
Look at this. What would you find?
Yeah, man.
Look at the level where it reacted from. No. Look at where price reacted from. A shaped key level that got disrespected, right? So what did price do? We took out the liquidity. We moved one time frame lower to the 2 where we came back to before the momentum kicked in. So if it is not clear on the 4 hours, let's go one time frame lower to either the 2 hours or the 1 hour. Any other question?
Thank you very much, sir.
Yes, sir. Okay, it says yes, 4 hours is a lifesaver, I promise you. Cherry, do you still have question? You raised your hand.
Okay, yes, shoot. Coach.
We have 1 more minute. Shoot.
Sure, I'll try to be fast. I was just asking if the time frames for bias in structure are the same for a day trader and a swing trader, or you use different time frames?
Okay, if you want to be a swing trader, we will get there. Thank you for the question. Okay. I'll put it into consideration. If you want to be a swing trader, you can start from monthly down to the weekly, down to the daily, right? You can. If you also want to be a swing trader, you can start from the weekly down to the daily. It means it depends on how long you want to hold your trade for, right? If you want to be holding a weekly position, which means that you want to take part in the entire volume, right, in a particular week. Let's say the entire volume for a particular week is going to be bearish, like to the downside, right? And you want to hold your trade for at least 3 to 4 days, you can start your bias from the weekly time frame and just take part of that weekly expansion either to the up or to the downside. But let's say you want to hold your trade for weeks, 2 weeks, 3 weeks, right? I've only done that a few times, right? I held a trade for 10 days. I still have the screenshot. I've done that for like 2-3 times. I did that for crude oil. I did that for Euro JPY. For crude oil, I held a trade for about 12 days. But the analysis came from monthly down to the weekly, and my entry was on daily. And I held a trade for 12 days. So we will get there. And the time frame depends on how long you want to hold the trade, right? So we don't have any time anymore. Let me see. So see you guys tomorrow. the recording is going to be dropped. Cherry, I hope I answered your question.
Yes, you did. Thank you so much, Coach. Appreciate it.
Yeah, thank you. Have a good night.